Welcome back. Let me get this Instagram live connected, then we're gonna get started. I think we're good. All right, let's go. So stock market correction. I think that's what we're looking at here. For the first time, we did the Santa Claus rally, but I think it's time to. I think the market is ready to reverse here, so we're gonna go over that. There's a lot of reasons why. Let me go ahead and flip this over for TikTok. Got everybody. Welcome back. I know it's been a while. I hope you guys enjoyed the holidays, the new year. It's a new year, and we're going to figure out what's going on here. So let me pull this up first, what we're looking at. All right. So S&P 500 peaked out around, we made new highs, right? We made new highs. And it was only a matter of time before we get a pullback. And I think we're reaching that. We're a little stretched, right? We're stretched not only technically, okay, we're not only stretched technically, but we're also stretched position wise. We're also stretched fundamentally. And now the macro is going to come into play. And let's figure that out. Let's talk this through so you kind of see why the market should pull back to some degree. It's already pulling back. I know we came back a little bit, but I think we go I think we go 3 to 5%. A little further. All right, 3 to 5%. 3% puts us at 464. I think that's like 4600 S&P. 5% puts us around 450, 4500. Somewhere around there. So we could go lower. It doesn't have to go that low. Somewhere in that middle spot, right? Somewhere in that sweet spot, I think we do pull back. If we do jump over to the US dollar, right? That's always a signal. The dollar's starting to bounce and it is decorrelating from interest rates finally. Okay. Because now the fears, now keep this in mind, this is key here. The fears of inflation are no longer the main fears. The main fear is, remember, the fears were inflation. Oh my gosh, the Fed's gonna, is the Fed going to keep hiking? That's always pushed onto the Fed. Now the fear is, okay, well, growth is slowing. When is the Fed going to save the economy? When is the Fed going to step in and prevent an economic recession? Even though we're not really seeing recession yet, we will slow down. All the forward-looking indicators tell us we are due for a slowdown in Q1, right? And more specifically, tomorrow we have the ISM, or we have the ISM PMI survey, and that's going to tell us, hey, is economic momentum picking up? Is it slowing down? And we got a signal today, right? We got a signal today. Let's go ahead and look at that signal. Actually, I'll throw that up on the. If you're on YouTube, or if you're not on YouTube, go ahead and jump over to the YouTube. The link should be in the bio if you want to see the charts that I'm putting up here on the stream. So, all right. So this is, we got a basically S&P Global Manufacturing PMI. This is just forward-looking growth, and that came in weaker than expected, right? It's rolling over. If you take a look there, it is starting to roll over a bit. So we are weakening, right? New orders, demand going forward is slowing. And, we want that to pick up at some point. Well, that might signal the ISM tomorrow coming in weak. And if the ISM comes in weak, right, this dollar is going to continue to move higher. The dollar will move up if the ISM is weaker than expected. Rates will fall. So we'll still get rates, pretty low. Bonds will still bid up because growth is slowing. So when growth is strong, rates back off a little bit, right? Rates go up a little bit. But when growth is weak, when we see weaker growth, rates typically fall. They always fall typically, right? It depends on the day, the week, whatever. But rates are going to be trending lower. Now, in the past, the dollar was trending with rates. That is changing. We're getting a divergence between the dollar and rates now because the fear is no longer inflation. It is no longer overheating. The fear is now excessive weakness, right? It is too much weakness, and the fear is now shifting to when will the Fed save the market? Powell, right? We get minutes tomorrow also. We get the Fed minutes, and we want to see, does the Fed minutes align with the market's expectation for cutting rates? If it does, the market will be fine. But if they are pushing rate cuts further out, or they're a little less dovish, or they're a little more, they're going to be dovish no matter what because growth is slowing. They're going to cut to some degree, but the market wants to see our rates aligned with our interest rate cuts aligned. What is the timing, right? What is the timing of interest rate cuts? So if we get a weak ISM and we have interest rate cuts unaligned with market expectations, the dollar goes higher. Here's your resistance levels for the dollar. Why is that important? Because the faster it moves higher, the bigger the correction, right? We might go 3% if the dollar spikes in this area. If the dollar spikes all the way to 104.50, right back at that second level of resistance, then we could be seeing, S&P fall pretty significantly. Maybe SPY, if you look at SPY, it's a lot easier. We come into that 200 daily moving average at 457, right? Which was the previous high from the summer rally, right? From the summertime rally. So we could be coming back to that summertime rally. We're pretty stretched. Now, that's just technicals, right? Also, I mean, that's not even technicals, that's macro. But if we look at the technicals, I think now keep in mind the Fed minutes and the ISM, that's the trigger to get this lower. That's the macro trigger. Technically, we're seeing bearish divergence. Technically, the RSI, the buying pressure is falling and price has been climbing. So technically, we're due for a correction. Okay. That's technical. It's pretty simple as that. There's not much else to say. Technically, we're due for a correction because buying pressure is falling, right? Buying pressure is falling and price has been trending up. So there's a lot of weakness. There's not a whole lot of volume coming in S&P. Now let's move over to the actual positioning. This has been the story of the year. All right. Stay focused here. This is where you learn. This is where you figure it out. This is why, right? This is what people are actually doing. So stay tuned here. All right. So positioning, active fund managers are nearly fully invested. The last time they were fully invested was July, right? When we had that big rally to the upside. So positioning is fully possessed, and these are active fund managers, right? So they're active as in they can rebalance, they can take some off if they need to. So we're already at the highs, S&P all-time highs, NASDAQ all-time highs, Dow all-time highs, and growth is slowing. The Fed is done, but they're fully positioned. So now the scare is the fear is weakness. Well, what's going to cause this? The ISM coming in lower, forward-looking growth weaker. What's going to cause this? The Fed minutes unaligned with the market, or interest rate cuts from the Fed not aligned with the market expectations. Simple as that, right? That's positioning here. Peak bullish sentiment. We already hit peak bullish sentiment, and that rolled over. Now peak bullish, and if you don't know what I'm talking about, you go ahead and jump on the YouTube. That's where we're at. Peak bullish sentiment peaked, right? Peak bullish sentiment. So we're due for a correction, right? That's positioning. Next, this is the put to call ratio. Put to call ratio has basically fell. So at the top you got call buying, right? You got peak call buying, and at the bottom you got put buying. So what are we seeing? That call to put ratio has fell. We had a nice rally. Now puts are starting to pick up again. We're starting to see put buying pick up again at the top. So is this a huge correction? No, but it's setting up for a correction, 3 to 5%, right? I don't know. It's just my guess. This is my opinion. We got a weaker ISM. I'm sorry, global manufacturing indicator. So I think we have a weaker ISM tomorrow. That is Wednesday. Fed minutes, ISM tomorrow, right? ISM is a business cycle. That is forward-looking growth. If it comes in weaker, the market's going to freak out because the fear is no longer inflation, right? We know inflation is done. So this is the actual global business cycle. And what that tells us is, hey, well, we're not expanding, but you see the reverse head and shoulders there in the US business cycle. Well, I think we still, start to come back up or start to re-expand, maybe April, March, April, who knows? But we're going to have a slowdown. Christmas, Santa Claus rally, lots of buying, consumers spending like crazy. Obviously, it's the holiday season plus the seasonal jobs. So that slowing will slow. The ISM manufacturing new orders are kind of slowing. So we want to see the inventories. China, right? You see the Chinese cycle, they're still slow. We're not expanding yet. So the business cycle is still flat. Just keep that in mind. The business cycle is still flat, but I think it picks up going into the summertime, right? And now this is why the market pulls back, but I think it's going to get viciously bought back up down 5 or 3%. We're going to get a vicious buy into that. Why? Because markets are not even leveraged yet, right? There's still a lot of under leverage in the market. This is margin debt versus S&P. It's just margin. It's just leverage into the market. You can see in purple that the market was over leveraged, and now that leverage back in 2021, and now that leverage is at a low. This was actually the biggest fall in leverage in history as far as total dollars, right? Total dollar leverage is low. It bumped up, yes, this summer and is back down. So if the S&P corrects, you see, we're looking at a soft landing here. Okay, we're looking at a soft inflation is done. We're going to get a correction because technically people are over positioned. There's bearish sentiment. There's some geopolitical risks, right? The dollar is about to move up a little bit, but rates are falling. So and inflation is done. So I think we're going to get that vicious buy back into the market. Now take this out with crypto. Here's where we are in the crypto cycle. Here's where we are. This is every single crypto cycle. We're at the very beginning of that. And you see Bitcoin hit 45K today, 45,000 today, jumping. Now, when the ETF is actually released somewhere in the next couple of weeks or not, it could be a sell off event. But that is a very small fraction of forward-looking indicators. That's a very small. Oh, okay, we sell off $5,000. We sell off, 10%, 15%. Well, we got another 500% for Bitcoin, right? Altcoins, you got another 1,000%. So just keep that in mind. That's what we're looking at here. Happy New Year to all you guys. What up, Big Riches? What up, Lachlan? Welcome back. I know it's been a while. We're gonna get back into it. I think the market is correcting. However, pending S&P correction, 3 to 5%. So that's what we're staring at. Just watch this RSI, right? The RSI should come back down, maybe mid-range. Maybe we come mid-range and we bounce from there. Nobody knows exactly. Maybe we come into the 200. That was a nice level of support back when we had that summer rally and we broke through it. But there was a lot more uncertainty here. Inflation is done. Keep that in mind. We're down to 1.8% core PCE 6-month annualized, right? Now you could cherry pick the data. You can cherry pick it, but the market is positive about inflation. It's coming down. Plus you have, immigration helping that out. And you also have AI automation helping that out, right? So that is what we're staring at today. That's the macro picture. Let's now, if you're interested, if you have any questions, go ahead and throw them out there. We'll do some more technicals. We're going to look at the Qs. We're going to look at IWM because Tom Lee says he's been right all year that the Qs are set. IWM small caps are set to outperform. Look at this big outsized move. Well, the market needs to relieve itself, right? Over positioned, overbought, pullback, and that pullback gets bought back up. That's the picture we're looking at. But the Russell, the small caps have a long way to go, and they are going to be. It's going to be a lot easier to move the Russell, especially with rates peaked out, right? Especially with rates coming down. So as we always do, we look at the macro forces. Okay, here's the dollar. Here's why this also is fueled by a weaker growth ISM because the dollar typically is a safe haven to weaker growth or geopolitical risk. And we got a little bit of geopolitical risk right in the Middle East, still there. It's not escalating too far yet, but if it does, expect the dollar to run back up. And if growth slows, same thing. But this is not a secular, oh, we're going back to a bear market. No, because the Fed now has enough room to cut rates. We're headed into election year. What do you think happens if the consumer slows too much? More stimulus, right? Margin is low. So let's go ahead and take those comments. If you have anything to say, any questions. Pfizer making the move. What up, D-Ma? Shout out to you. Shout out to you guys. Let me know if you have questions here. We're going to go back into it. I just want to stop and make sure I didn't miss anything. And then we're going to get back into it. But hey, we'll have a small correction. There'll be some opportunities here. Let's take a look at Tesla. Everybody's looking at Tesla, right? Tesla's really pissing people off. Tesla came out with pretty good deliveries today. Okay, they beat production, they beat deliveries, but this price is pretty stuck, right? It is trending higher, and it is possible that it does break back down. But Tesla's going to need the overall market as a catalyst. We have earnings coming up in January, so I think price isn't going to. It could run up into it, but if we do get this correction, if we do get a correction, the dollar moves up. Tesla more than likely just consolidates at this level, right? Somewhere between 260, 240, right? You might get a really good deal if it drops. Let's go ahead and zoom in there. If it drops and fills this gap down here, which I'm keeping track of, and this is actually where the 200 daily moving average meets. So you could get a 240 Tesla. That'd be nice. Tesla is still the dominant EV, maker. And guess what? Rates have peaked. So looking into 2024, a lot of people say this is the iPhone moment for Tesla. They're delivering more, they're selling more than anybody else. If you do count BYD, I get it, but that's in China, right? That is in China. And Tesla's by far their energy storage business is still growing. They have a lot of other catalysts, FSD, Cybertruck. They can now realize Cybertruck revenue. So we'll wait till earnings. I think this is a non-touch until earnings because we're too close to earnings. Earnings can be very vicious to the downside or to the upside. And we've been consolidating for now 3 years in the Tesla price. So it's been a while. It's a lot of consolidation. Be patient. The real breakout here. Now, this is going to be a massive breakout for Tesla when it does happen. The real breakout is if you do catch it between 300, that'd be good. But the real breakout area is here. Look at this, massive, very Tesla. When Tesla moves, it moves. But you have a big reverse head and shoulders here. Okay. 300 is that zone. Now, if you catch it above 260 on a longer term time frame, right? Because short term, it's gonna mess you up short term. There's a lot. This is the most traded ETF. Well, it's not ETF, but the most traded security right now in the market by far. So institutions are going to see your orders. They're going to play you. So you have to be long term. I think personally, not financial advice. You got to catch Tesla on a massive pullback, right? On a nasty oversold. Now, where's the RSI right now? It's mid, right? It's in the middle. So it's not too high, it's not too low, it's in the middle, but I think there's some, it beat deliveries and it still sold off and the market is due for a pullback. So there's not a whole lot of room to make mistakes here. I think you have to be patient with Tesla. It could break down it could break this trend and come right back to, form this another reverse head and shoulders. All right, so this is another possibility. You got that shoulder here. And it's not like this actually carries the market, but it's just something to look at. You could get something like this, right? Right back into what is that? Maybe 220, 237. That'd be a nice gift if you're not in it. I know it's tricky, but Tesla's very hard to trade. So you get that RSI a little lower and the market sort of, comes a little, the positioning starts to roll off. I think it's a better opportunity, especially with the mega cap. NVIDIA looks great. AMD already took off and Bitcoin's starting to move. Ethereum has some room, so we'll see how that plays out. Lachlan McLaughlin, RSI will stay above 52. Are you speaking for Tesla RSI above 52, McLaughlin? Do you have any how long would you buy it for? What indicator is that? Okay, I got some comments here. Be patient. Look, I always say this. If you want me to read your comment for sure, jump over to the YouTube stream because your comment will stick. TikTok's the way they have it set up is very poor. So it gets lost. Every time somebody joins the live, it pushes the comments lower or pushes them higher. So if you really want me, if I forget, if I miss you, jump on a YouTube stream so I can answer your questions. Thank you, Lachlan, for doing that. Will that indicate bull or are we starting new bull cycle? We are still below 2 years ago. No, this is a bull cycle. We're in a bull market. We're in a bull market for the S&P and the Qs. This is not at this point the bears are just they're upset. They missed the rally, right? The rally is here, but we're gonna have corrections, right? I think we're looking at a correction right now. We're definitely looking at a correction. Look at the RSI. It's going to rapidly sell off, but it's going to get rapidly bought up just like it did last time. The question is, does it come halfway, right? Do we get a halfway sell off? Oops. Do we get a halfway sell off, or does the RSI come all the way back down to oversold? And that's really going to depend. I don't know. I cannot predict that, right? We could bounce here. It really depends how growth numbers, how the macro starts to come in. Because again, the main thing to understand here is that inflation is no longer the risk. That is not the fear. The fear is growth falling below the ability for S&P to keep profit margins. It's growth falling too quick, too fast, and then that's going to lead to the Fed. Is the Fed going to cut rates in time? Can the Fed save growth? Can they keep GDP from falling too quick? That is the new fear. That is the new fear. So expect rates to continue to fall, right? That's going to help the housing market to some degree, but here's the 10-year, right? The 10-year still weak. I don't think the 10-year spikes because inflation is nowhere to be seen. Growth is actually slowing in the first quarter. So expect rates to keep falling, which puts a bid in bonds, right? So if you look at TLT goes higher. That is the long-term bond. It's going to pull back for now, which is why I think we do get this correction because it's just, it's up a lot. It is fall. The buying pressure is now starting to fall in general for crypto. Now look, crypto is going to be a little different. Crypto is going to be different. The correlation between stocks and crypto is starting to diverge. It is starting to diverge. Now, Bitcoin, I always say this, if Bitcoin keeps running up into the ETF, there's a large chance that a lot of people are leveraging that it actually breaks down and sells off, right? So there's a better risk reward for some of the altcoins. Solana's up way too much, in my view. Ethereum still looks very Ethereum still looks good. Ethereum hasn't really broken out. It is holding the previous resistance. You can see that big cup and handle pattern. But it might have some room, right? Crypto might have room to correct at some point. We just don't know. We're in a very weird position because the market is now reassessing what the driver is and what the risks are. It's starting to reassess. So we don't know. We have to keep track of the fundamentals. We got to keep track of the technicals. The technicals are screaming correction. Okay, not huge correction, but a correction. The macro we're unsure of. We got to see tomorrow. Where's the ISM? Where is economic momentum? That is the question. Is economic momentum still accelerating? Is it going to slow down? It looks like today's signal, which was the S&P global manufacturing or forward-looking economic growth, it looks like it's slowing down a little bit in Q1, right? It's forward looking. This is not what happened in Christmas at Christmas time. This is not the holiday season. This is what supply chain managers are, purchasing managers realize they're purchasing the future. They're purchasing stuff for the future. And if they see, growth is slowing, the ISM will show that the manufacturing cycle is going to show that, which we get tomorrow. And markets are probably not going to like it if it comes in below expectations, especially with the Fed minutes coming out. And the Fed minutes, the market's going to want to see that the Fed minutes are supporting rate cuts if growth falls, right? If it doesn't show that and the ISM falls, I think we get a bigger correction. I think the dollar spikes. Key is to just watch the dollar. Very easy. You cannot watch rates anymore. You can't really watch rates anymore as the primary signal because rates will continue to fall because it is no longer inflation as the fear. It is now, risk of a slowdown, right? So risk assets are a little different. Crypto could just keep going higher because it's a very, there's not a whole lot of supply in there. Everybody's piling in for the ETF, and that's going to be a huge catalyst. So I'm not sure about that, but I will be a little more sure as we get that news come out. I'll let you know what I think. Okay, let me hit some of these comments here. I hope that answered your question there. But we are in a bull cycle overall. We're in a bull cycle. And let's go. How long should we stay out of the market? It's day to day. More than anything, I like to, I want to watch this RSI, watch the dollar. More than anything, nobody knows the exact time. All we can do is track it and kind of make a better estimate going forward. I would say once you see the dollar start to roll over again, that's going to be time where the market is going to find a bottom. You should see the volume. We should see S&P, and I'm just going to use S&P here. You could use the Qs. The Qs are falling sharply, but I'm going to guess somewhere around the 200 daily moving average, right? The 200 daily moving average, which was also previous resistance, which was also somewhere around the summertime resistance also, right? So you got to look at all the technical indicators and say, let's get down there. Let's see some volume come in. Let's see the dollar peak out. Interest rates, who knows? Interest rates might not make a big deal here because bonds, look at, if growth really falls off a cliff, bonds will go higher. Rates will keep falling, but stocks won't. So that correlation is not as strong as it was. That's what I'm trying to signal here. Something has changed in the market. Something has changed in the market, which is the fear is different. Okay. Keep in mind, everybody's over positioned. I'll keep you guys up with positioning, which are the charts they update weekly. These are asset managers. These are fund managers. These are active managers. This is sentiment. Bullish sentiment is over, right? Not over. It's peaked out. So we got a correction. Bullish sentiment is peaking. It's rolling over. Positioning is rolling over. I don't want to say it's rolling over, but it's already peaked out. So there isn't a whole lot of buying. We don't see a lot of volume, right? So the timing is keep track, learn what moves the market. ISM tomorrow is going to be a big deal. Tesla fundamentals, they cook the books. Don't ever read Tesla fundamentals. They cook the books. Everybody has everybody has their opinions about Tesla. I for one think Tesla is going to outperform everything else. The other EV makers are falling apart. Tesla can now increase prices. They just came, as a matter of fact, let's go ahead and jump over. You were talking about Tesla here. Let's go ahead and jump over. Look what we saw today. They beat delivery, they beat production, and any signal that the Fed cuts rates, margins for Tesla explode, right? Margins absolutely explode. And where does that take us? That takes us to capitulation by institutions. They're going to pile in. Retailers are already piling in. And we had the highest, I think. Oh, also the tax credit. As of yesterday, there's only a couple. I think I have this on my profile. There's only a couple of cars that actually get the 7,500 rebate, right? So now there's a rebate to get that's going to increase demand because there's now a 7,500 rebate, and Teslas are becoming cheaper than actual regular vehicles. I think the average price of a new vehicle is about 44,000, right? 42,000, somewhere around there. Well, Tesla continuously falls. So you got to use common sense there. They have no debt. Revenue growth is exploding. I mean, it's pretty obvious, right? This is the transition. They're growing another factory in China, and they're trying to grow in India. And you just gotta, just gotta be patient. Tesla's gonna outperform, in my view, in my opinion. I think it outperforms everybody else. It's one of the only mega caps that hasn't really, yes, it was up 100%, but it hasn't really moved that much. I got the RSI indicator if you're asking. How long would you buy it for? I'm not sure. Be a little more direct with your questions. What up, Dimaj? Jay, regarding BTC, the issue is that the whole world knows BTC is going to 60 or 100K, right? But the supply is so small. This is bad news automatically. The thing about Bitcoin is the supply is so small. It I wouldn't gauge it like the stock market, right? I think it has a huge run up. We might see Bitcoin go to all time highs before the halvening. Very possible. It goes to all time highs before the halvening and then just corrects massively. When Bitcoin goes on a bull run, it has massive corrections, just like Tesla. But I think the signal here is, does Bitcoin move up into does it jump to 50K going into the ETF? If so, it could pull back and it could just stop at 40K and then go higher again, right? But I think there's just too much demand because BlackRock, JP Morgan, there's too much demand, and those inflows are going to come in, hundreds of millions of inflows on a monthly and weekly basis. There's not a lot of supply. That supply gets cut in half in the summertime. So I think, Bitcoin's going to do well. A lot of the altcoins are moving up also. Very small supply. I have Tesla for this week. You think it's going to hold or drop? I don't know. At this point for Tesla, it couldn't move higher off of a beat on production, a beat off delivery. So I'm not sure Tesla can hold up here. Long term, I'm very bullish for 2024. A lot of people say it is the iPhone moment for Tesla, but we need the market to flush out a little bit. I think there needs to be a little bit of a little higher flush. Now Tesla can move uncorrelated to the S&P. That's very possible too. But the next catalyst, it looks like, is going to be the earnings report, right? It's going to be the earnings report. So we just got to be patient for that. It did not move off deliveries. It did not move off of, higher production. It is what it is. But I think that's what we're looking for. So yeah, Tesla's looking good. Who's this? Dan Ives. I think he was talking about announced deliveries. Yeah, no, we already went over that. So they beat the street estimates for deliveries. That's always a big catalyst for Tesla. And I was thinking this is the big catalyst. It didn't happen. So that tells me big money is waiting for the earnings report when it comes to Tesla, right? We're waiting for that. What about Shiba? No comment. I don't have any comments on Shiba coin. I don't mess with those. Are you still bullish? If you're probably coming into the stream kind of late, I think we get a 3 to 5% correction in the S&P. I'm going to say somewhere between 4,500 and 4,650 on the S&P before we start to really materially move higher again. That's what I have there. Thanks, man. Just put my entire life savings into QQQ. Yeah, that'd be pretty dumb. Tesla, I know that's kind of sarcasm. Tesla, how many months far away would you buy it? Ah, I wouldn't. I would never buy something based off of time. I want to look at the macro. I want to see the macro improve. I want to see the technicals improve. I want to see the fundamentals improve. So Tesla margins have bottomed. Okay, macro growth is starting to reaccelerate, given by the ISM manufacturing. The Fed is more dovish. They're not worried about inflation. I think we're on track for that. And technically, you want to see Tesla start to build a better base. Okay, start to build a better base. We'll see. I think, you might want to see the RSI come all the way back down, but Tesla's very hard. That's why people usually lose money. You got to be patient. It's always better to, jump into Tesla, in my opinion, when it's very oversold, because it's going to go higher, right? If it gets oversold, a lot of people leverage into options, but right now the overall market is it's stretched. So we need to pull back. If it becomes an ETF, banks will be able to allow it to transact decreasing supply. Yeah, Bitcoin's going much higher from here. Next 6 months, Bitcoin's going higher. Next 12 months, Bitcoin's going higher. Next 18 months, Bitcoin's going much higher. Collateral for loans. Yep. There we go. Okay, cool. So it's called the halvening, not the halvening. Somebody said the halvening, not the halvening. I mean, words are, nobody cares what it's called, Lachlan. They just care that the price goes higher. So that supply gets cut in half, supply goes higher. So yeah, we could look at a little bit of cryptos though. But main point here is the narrative is shift. Watch the dollar, right? You had the big move today. And we talked about this last night. I said, hey, the market looks like it's going to correct. Watch the dollar. And we had that big move with the dollar, the big move to the upside. Okay. And also the RSI for the dollar. Let's go ahead and flip back here. The dollar's RSI also has been accumulating at the bottom. This is a bullish divergence, which tells us even if there's not a whole lot of fear, the dollar should come back up. In the euro dollar market, which is bigger than the US market, that positioning is starting to leverage back in. So I'm not sure if it goes way higher or just a little bit higher. I think the top is somewhere around 104. We could definitely see that because there is some geopolitical fear that could accelerate. That'll give an excuse for S&P sell off, right? And when you sell off in the S&P or the Qs or whatever it is, you settle into dollars. The dollar is the global currency. So when people sell, the dollar goes higher. Keep that simple rule in your head. When people sell assets, the dollar goes higher because it collects the most settlement, right? That is where most settlements go to for the most part. See what else we got. Yeah, so that's what we're looking at here. Oh, you know what? I missed these. Oh, we missed it. Okay. I guess we're a little late there. Oh, that's fine. Looks like we're a little late on the Instagram. That's unfortunate. That's fine. Yeah, so the dollar, watch the dollar. That's what I would say. Also, look at crude oil. There's no inflation. This if you're still worried about inflation, you're really hoping because this points to if anything, this points to a very sharp slowdown. So oil is done. We called this for a while. We said, hey, I think this is the top. Inflation is going to come in much better. Like inflation is going to come in a lot better than people expect because they're still talking about reacceleration of inflation. Well, there's no way you see that when the first quarter is falling, right? The first quarter of growth continues to decelerate. So there's just no way you see inflation come back. The real issue is growth. So as long as that falls, rates should come down. That's actually going to help mortgage rates too. So a lot of people are leveraging into real estate. If we look at the ETF look at this is the real estate ETF for the S&P. It is starting to break out. Okay. And if you go to home builders, where's the home builders at? Where's our home? There it is. ITB home builders, all-time highs, right? Back to all-time highs because rates are now starting to fall and that gives confidence. Home builders are going back up. Home builder sentiment is picking up again. It's been a while. And I'm sorry, Instagram, we missed. I thought it was live. It wasn't live, so you missed a lot. But you can always go to YouTube and watch the intro. So that's what we're looking at here. Oil always drops in the winter because of the winter blend. Okay. It's just as cyclical as the S&P. Yeah, oil's pretty cyclical. And plus, there's a lot of supply. Demand is falling. China still not strong. Hey, and also keep in mind, China just had the largest stimulus in their history. They printed like 1 point something trillion yuan the other day. All right. So China's still stimulating. That's going to prop up crypto more than anything because you're increasing global money supply. Talk about supply. Here's another reason why I think we had this correction. This chart's a little confusing here. Let me try to widen it out. Okay. Um, Shadow liquidity from the Fed dropped sharply to end the year. This is in white. The white line is really Fed net liquidity. So this was the bottom of the market pretty much. Fed net liquidity is part of economic momentum. Well, that momentum fell off sharply because the reverse repos, there was a pile into the reverse repo. I expect S&P to fall. So this was my first signal, which is the forward-looking indicators. Economic momentum, ISM, which we get tomorrow, and we had a clue on that this morning. I think we get a lower ISM, and liquidity fell. So global liquidity is flat. So man, there's a lot of indications we get a correction here. The question is, how far does the correction go? I don't think it goes that far. We have no president, geopolitical. I mean, that has nothing to do with it. Whether the president is I gotta watch how I say this because I don't want to get banned again. By the way, I was banned on TikTok for 2 weeks. Who I don't even know what it was, so I got to be careful what I say here. Um, but it's whoever it doesn't matter what who's in there. It just depends on the policies. The market cares about the policy. If you got a good policy, you got a good policy. Infrastructure, the infrastructure bill, $1.2 trillion. We talked about this in 2022. That there's a lot of growth coming into the market because jobs didn't fall off, the gig economy, right? All the immigration is leading labor participation. Why? Look at all your Uber drivers, look at all the Lyft drivers in New York City, in the big cities. A lot of them are immigrants, right? So you're getting immigrants spending money, they're coming in, they got jobs. Maybe I got to watch what I say here because there's some other jobs that might get me banned on TikTok. But either way, things are set to accelerate going forward. And we talked about that margin, right? The margin is still, leverage is still low in the S&P. So when we get a nasty pullback, 3 to 5%, that leverage should start coming back in when there is clarity that the Fed is, we'll see the Fed minutes tomorrow. I'll be live for that. I'll be live for the Fed minutes tomorrow. Let's see what time they come out. But yeah, the Fed needs to communicate, hey, don't worry, we'll come in and we will. Also, construction spending was very weak this morning, month over month. It's just 1 month. We got job openings tomorrow. Those probably keep falling. Let's see. FOMC minutes come in at 12 p.m. my time. So that's 3 p.m. Eastern time. So I will be live a little later, 3 p.m. Eastern time, not about the same time as today. We get the FOMC minutes. The key there is the Fed changing their language at all about when they cut rates? They're already pricing in 3 rate cuts into 2024 based off of, slowing economic growth and slowing inflation. So the faster inflation falls, the easier the soft landing becomes, right? It becomes easy because they can just cut if any sign of growth slows. This is a very bullish market. Very bullish market. Doesn't mean you don't have corrections. You're still going to get corrections. That's part of the game, right? You take 3 steps up, you take 1 step down. And I think we're right around that 1 step down. Big Bird, would you say Big Bird, you agree to disagree? Well, policy matters, Big Bird. The market doesn't care what the name of the president is. It doesn't care as much. It cares about the policies, right? Cares about the policies. So, does it believe certain people will have better policies? Sure, 100%. So it does matter to some degree. But what I'm saying is, point blank, the policy matters the most, which is why markets went higher all year because of the fiscal stimulus, infrastructure bill, CHIPS Act, Inflation Reduction Act. You can't argue with that because that kept growth higher, all-time high construction. This is not an advocation of the president. I can care less. What I care about is actual facts and not your opinions and how you feel. It's irrelevant. What matters is what is fueling the market, what is a potential risk to the market, not your political views. Too many people had a negative political view and they use that to forecast their economic, the economic forecast. That's the wrong way to look at the market. You're going to lose. You're going to lose. And I know a lot of people say that, but you're going to lose. Everybody was bearish. I called the Santa Claus rally way before, and it was fun. Why? Because people get pissed off at politics. Politics don't matter. Politics are a small portion of what's going on. Biden actually reversed when it came to the oil supply. Now we're the highest producer of oil. This is not an advocation of the president. Again, would I vote for that guy? H to the no. But everybody's going to save their economy because your country doesn't work without a strong economy. So, you can go at that all day, but it's a small degree. The market just wants to see that inflation doesn't come back, that growth is and plus we're in an election cycle. So what's going to happen? Big Bird, we get more stimulus here. We're going to get more stimulus here because his rating is so low. We said this for a while. His rating is too low. What do you do to get more votes? Even if what do you do to get more votes? You print more money. So I expect more money printing at some point, which is why I think we do get a slowdown in Q1, January, February. Maybe we move sideways for a while. S&P, Qs, whatever. Crypto might just keep going. Who knows? Crypto is driven a little different, but somewhere around, I think April, right? April, May, I think the market starts to reaccelerate again. It could be before that, but there's going to be pressure to cut rates from inflation and re-stimulate. And boy, that is going to be a gigantic cycle when you get fiscal printing, monetary cuts, and the market's just going to go higher. And you have also you have a higher productivity here. That's what's really driving the market too, is more productivity from AI. No, it's just reallocation of funds at the beginning of the year. Mike trades. Mike trades. If you want to be a little more clear on what you're speaking of, growth. I don't even know growth. Reallocation of funds at the beginning. When I say growth, there's two things. There's economic growth, and then there's the stock market, right? The stock market front runs economic growth. Economic growth is still flat. We're still in contraction as far as the momentum. We're still in contraction territory, right? But the reason why the S&P is going up is because, well, there's two types of growth. There's service growth, and that's been positive all year, and there's manufacturing. Manufacturing's been in recession, it's been contracting, but if we get manufacturing starting to reaccelerate, the bull market's coming back, right? Plus, you're getting monetary stimulus. Global liquidity is picking back up, and it's going to only accelerate from here. Going through the process of innovation. I don't know what you're saying. I know I'm a little late to it, but yeah, innovation is also going to drive a lot of growth, productivity growth. Let's see. Don't think you called the Santa Claus rally. Been around forever. Don't think you did. Well, you could go back to my videos. I called Santa Claus rally in October, and you just go back to my videos. I called the bottom of that big correction. I said, "Hey, we're going to bounce here." Now, a lot of people did. I'm not saying I'm the only guy who ever called the bottom. Nah, I'm not saying that. I'm just saying, as far as my content and whoever's watching it, we said, "Hey, we're going to go to all time highs." You guys, if you were here before, we said all time highs Q in the Qs, maybe an S&P all time highs. We got there. Okay. That's my credibility. Is it perfect? No, but because I thought Tesla would break out, didn't happen, right? A little frustrating because I was long Tesla, didn't work out for me. Overall, the market went higher though, right? The yields came off. We said inflation would be lower. So go check you, Mr. User. Go check my previous video so you can see that we did call the Santa Claus rally way back in October. I even said, hey, this is the bear market killer in October, and it happened. So but I'm not saying I'm going to know the future. I don't know yet. I think we have a correction. That's all I see. Correction. We need to keep up with the macroeconomic picture because it's starting to shift a little bit. So I'm not sure. All I know is we need the dollar lower if this bull market's going to continue. You need the dollar to keep falling. Rates need to either move sideways or fall further, and profit margins need to continue to reaccelerate. Other than that, there's not really any threats here. It's just over positioning. Brian, what up, Brian Zerb? You said Rivian got roasted today. Well, I would say this, Dimaj. Rivian probably got roasted, and I haven't looked at the numbers because they cannot grow. Tesla's the only EV company who doesn't have a lot of debt, and they're actually producing more EVs. They're delivering more EVs. Model Y, best-selling car in 2022. 2023 is set to continue to accelerate. Yeah, they have competition with BYD, but hey, it's a $2 trillion market. Okay, Tesla's going to move higher. And yeah, I think Rivian. Remember, I said I'm not really too big on Rivian. I'm not too big on Rivian. Also, money market funds, right? That cash is going to start to come out of the money market funds and get back into equities or crypto. I think it goes into crypto also because you're getting what you're getting 5%. Well, that 5% is already in the future going to disappear as the Fed cuts rates. As the Fed cuts rates, that 5% money market interest falls. That yield actually falls. So when you say higher T yield, higher treasury yield, I don't really know what you're saying. Are you asking, what are you asking there? You just said higher T yield. Not sure what that means. User one. Thrash rally. Yep. You called it. Thanks, Bukowski. Yeah, you guys were here. You guys were here when we called it. You guys were here. Maybe you capitalized, maybe you didn't. But and that's just for somebody in the TikTok comments, because they're like, you didn't call it. And I'm like, well, you weren't here. So we'll see. Hey, if I'm wrong, I mean, hey, I'm wrong. But for now, and this is not financial advice, it's just to give another view of the macro. I don't know many people who are doing fundamental analysis, technical analysis, and macro analysis all in the same stream. You don't usually just get one, right? People endlessly calling for a recession and a tanking, the market's going to all-time lows. It never happened. You got fooled. Right? Whoever you are, you guys got fooled. Here we go. We have the Instagram. I got to keep track of all these. Is it wise to buy BYD because of Chinese stocks? I would say heck no. I would not mess with anything Chinese. Don't do it. In my view, Tesla by far is the best EV. It's still where it was 3 years ago. If you look at the Tesla trend, when it breaks out, it breaks, right? Because there's a lot of leverage. It is the most shorted stock as far as dollars in the entire market. So once they do break something, and when I say break something, expectations to the upside, Tesla's going back to all-time highs. That's, as an option trade. There's other good trades, but as an option trade, that's a big options trade. Me personally, I don't take anything lower than 3 months. It has to be 3 to 6 to 12 months out when it comes to an option trade this big because it does pretty well. I don't day trade, especially not right now. I will eventually, but right now, again, we're trying to navigate the markets because there's a lot of day traders out there already. I think it's profit taking right now for the next tax bill. Yeah, yeah. Also, you got tax profiting, or I'm sorry, tax bill, harvesting, whatever you want to say, because people bought in. So we're gonna see that. Where is the USD at? Where's the dollar at? Oh, where's the dollar at? Good question. Yeah, the dollar is key at this point. I think the dollar is becoming more key than rates because rates are going to continuously fall. They might bump up a little bit, but rates should fall or stay where they're at. So watch the dollar. Typically in the past, the biggest sell-offs in the market were when the dollar spikes or goes higher and when bond yields are falling, right? When you get that combination, right? Dollar going up is risk off. Yields falling are saying growth is falling. So that combo basically says, uh, you know, growth into the future is not there. But in this case, I'm not too worried about that. I'm not too worried about that because the Fed can cut 25 basis points. They won't cut to zero, but they can cut at any point and re-stimulate the market really quickly, or they can stop selling their, stop pulling money out of the market through their or not reverse repo. They can stop pulling money from the Fed balance sheet, right? So they have so many ways to stimulate growth, and that's why we have to keep track. And I think the market's keeping track. Another important point here: the market is tracking, okay, where the Fed stands on cutting rates. What is the timing of rate cuts? That's what the market wants to know. What is the timing of rate cuts? Powell, what is your timing? If it doesn't align, well, that's a risk. But if it starts to align, we go right back up. Maybe the correction isn't that bad. You don't like Baba? Where's it at? Yeah, I'm not a fan of Baba. I mean, I'll do some TA on Baba. I'll do some TA right now. I'm sure there's some Chinese stocks exploding because China is like China is injecting the most money ever into their market. They're just boom, 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 right? They can't even get growth up. So China will explode eventually. Actually, the credit impulse of China is moving higher. Let me see if I have it here on my. Do I have the Chinese credit impulse? That's the most forward-looking data. Here it is. This is the Chinese business cycle. If you're on YouTube, and what that is you can see it wedging. You guys can see it wedging, right? Now it's not a stock, so you don't really read it technically. But what that tells you is that there's more stimulus coming in versus GDP. Okay, actually, no, this is new orders minus inventory. New orders, as in new orders going forward, right? Minus inventories. So you take away the inventories, and all that tells you is if inventories are falling and new orders are going up, there's a new boom in manufacturing. Manufacturing is the underlying economic momentum for the economy, right? For the markets, it's liquidity. So whenever you pair liquidity with the business cycle, liquidity, global liquidity plus ISM, or in Chinese in the manufacturing cycle, that's how you can tell. So when we get above 50 for China and US, the bull market's going to be insane. I think we have a vicious bull market, especially with presidential cycle, printing money no matter what. Somebody said, what else did you say here? If you want me to look at Baba, just jump on the YouTube. I'd appreciate it. You'd help me out a little bit, and I'll help you out by doing some TA on Baba. I know when I hear somebody that knows what they're talking about, appreciate it. Mad Mac 221. We went through 75, then 50, then 25. So how is 325 basis point drop going to help anybody buy houses? Oh, good. That's a really good question. Shan, very good question. Shan on TikTok says, how is a 25 basis point drop going to help anybody buying houses? Well, number one, most people are already locked in on low rates, right? So it's the stock market is forward looking. So it's not really looking at the small percentage of people can they buy a house or not. It's just looking at, is there enough spending to support growth? That's what the market's looking at. Is there enough spending to support growth? So the 25 basis point cuts, you're thinking of, oh, well, is that going to accelerate the housing market? Well, I would say yes. Here's your other mistake when it comes to the housing market. Um, the Fed cutting rates isn't necessarily about the housing market. It's a small signal, but the real signal is the bond market. The bond market determines rates for the 10-year yield determines rates for the housing market, not the Fed. Okay. The Fed influences it, but it is this right here, the 10-year yield, the 10-year bond yield. This is the benchmark of all lending. Okay. This is the benchmark of world lending. This is where debt is created. Okay. So as this fall, now check this out. This was at 5% earlier in the year. It peaked out. The Fed is still here. So use some common sense. The Fed is at 5.5, but the bond yield is already down to 4. Why? Because they signaled the end of rate hikes. They signaled that they would be easing from there. The bond market front runs the Fed, rates ease, the market explodes. Housing is lagging. So housing and real estate is the most lagging what do you want to call it, investment or part of the business cycle is very lagging. Stocks are forward looking, equities are forward looking, crypto is even more forward looking. Crypto is the most forward looking because it's the most sensitive to liquidity, right? Rate cuts and all that. So what I think is the question, and I'll have an expert come on this week to talk about how the housing market's looking. But the 25 basis point cuts are going to help growth. Housing is one piece of growth, but housing isn't falling. Why? Because most people are already locked in at low rates. If anything, housing prices are accelerating. And again, to answer your question, I think the Fed is shifting tactics by saying we're going to cut 3 times. Why? To get the bond market down right here, right? So now rates are down. So what happens? You get home builders getting more confident. They start increasing supply. Therefore, housing prices stop going up. I think that's the Fed's tactic. I could be wrong. That's my guess, though, is that they're using their tool, which is communication, to get bond yields down, to get more housing supply up, to lower prices, or at least keep them where they're at. I don't think housing prices really ever fall like that. They're not going to fall like that. This is not 2008 financial crisis, but they stop going up to some degree. And they are falling in some states. It just depends what city and what state you're in. Oh, Brian Zerb, you and the trading initiative guys are great macro and tech content creators. My two biggest go-tos for the market content. Hey, I appreciate it. Shout out to you, Brian. I do appreciate you. Appreciate you. That makes me keep going here, man. I'm glad I can bring value. As long as I can bring some value to traders, investors, position traders. There's different types of traders. There's day traders, okay? There's swing traders, there's position traders, and there's just investors. As long as I can bring some value, I'm gonna do it. And I appreciate the comment though for sure. Carbides, mortgage rates, mortgage rate cuts turn the wheel of existing home buyers who were stuck in home they didn't want because of the excellent 2 to 4% rates. Many of my neighbors have sold their houses recently. Yeah, so it's already moving. The housing supply is increasing. So it's not even just new homes, it's also existing homes. People want to move, right? And what they're doing is they might have locked in 3%, but as long as rates keep falling, what they'll do is they will sell their house, they'll pay for a little higher rates in anticipation of refining lower into the future. So if you're in the housing market, you actually want to slow down in growth if you're trying to move, because if you sell your house, and a lot of people are doing this, they're selling their house, they're moving into an apartment and they're waiting for rates to come down, and then they go buy a house, right? Because an apartment, you're not paying any interest. They go buy a house when the economy falls or when the Fed starts to cut rates. They go buy a house because now rates are lower, and then they can refi as those rates keep falling if they do. So I think the Fed is just communicating into the future. Also, homeowners listen to real estate agents who are probably pounding on the customers to sell by because rates are coming down. They're salespeople at the end of the day. Yeah, they're selling to people. So yeah, they're going to tell. It's always a good time to buy. That's what they always say. I'm looking at it too. I have a plan going forward. We did this in the past, which is, hey, maybe it'll be good. Well, I'm not going to talk about that here. That doesn't make no sense. I'll talk about that on another stream. This is a little bit more. Consumer debt is at its highest. Shan. Oh, Shan. Now I see who you are, Shan. You are bearish. You are still bearish. It sounds like, maybe I'm wrong. It sounds like you're still bearish. Consumer debt is at all-time highs. I don't know what point you're trying to make here, but you're actually measuring that I think, incorrectly, which is consumer debt itself doesn't matter, right? Debt always goes higher. If you want to look at GDP, or I'm sorry, US debt, guess what? It's at 33 trillion, right? You go back 10 years, 5 years, debt is much higher, but so is the stock market. Why is that the case? Because it's all about the interest payments and it's all about incomes when it comes to debt. So consumer debt might be high. You're right. That is one small risk. It's not a huge risk, but mortgage debt as a percentage. I'm sorry, consumer debt as a percentage of income is what you got to look at. So they can pay their debt off, is what I'm getting at. As long as they pay their debt off, the market growth keeps going. Growth keeps going as long as they can pay their debt off. So as a percent, consumer debt, and I think I have this chart somewhere. Consumer debt as a percentage of income is actually lower than pre-pandemic. So actually household balance sheets are stronger than they were. So that's where you're misled. Don't get your feelings hurt when I say that. I hope you just learn, but as a percentage of payments, it doesn't really matter to the stock market, at least maybe to some individual, but not really to the stock market. Their incomes are higher, wages are higher, their houses are worth more. Therefore, if they do pull equity out of their house, they have a lot of cash, and so it's like that's it is what it is. So consumer debt alone is not enough. Once the interest low happens, we go into recession. Once the interest low happens, I don't really understand that, Emilio Perez. Once the interest low happens, I'm not bearish. I play both ways. Oh, okay. Well, maybe you're just throwing out a concern. It's that's valid. You're saying debt to income is higher than before. Um, Debt to income, no. Debt to income is lower. Maybe I misspoke. What I'm saying is debt as a percentage of income is lower than it was pre-pandemic. Debt as a percentage of income is lower. Debt as a mortgage debt as a percentage of income is also lower. We talked about this back in October when everybody was super bearish, and I was like, it's not actually true, and that's why the market keeps going higher because people are looking at the absolute number. When it comes to markets, it's not the absolute number. It's it's more about the rate of change, right? It's about the rate of change of inflation, not the absolute level for markets, because markets price into the future. What up, Tigger Media? Nice to see you. What up? What up? I know it's been a while, but we're back. We are back. Um, we're back on it. So, and I'm gonna try not to get banned anymore. I'm gonna try to watch what I say here. Unfortunately. Okay. So yeah, debt to income is lower than it was. I hope that's clear. That makes sense. All right, where are we at with S&P right now? See Bitcoin back to Bitcoin's moving around a little bit. And the other thing too with the whole consumer debt, we said the whole time that Biden would continuously try to give concessions or give some type of, initiative, and he's been doing it, right? He keeps doing more stuff to help out the consumer. And my guess is if the consumer slows too much, in mid 2024. I think it's going to be February, March. Well, there's going to be another initiative. There's going to be, and when I say initiative, another some more legislation, executive order, who knows what it is, or some type of deal, some type of fiscal policy to help out the weaker consumers so he can get votes. And that's going to help the market out also. And remember, S&P profit margins are actually higher than they were before when the Fed started hiking. So profit margins never fell. Profit margins have been rising for the S&P 500 companies. I'm trying to play the downside for Q1. Yeah, that's not bad. I'm looking at it too. I'm not gonna play the downside because I want to see a specific thing. If I play the downside, I was actually looking at that today to play the downside. Here, I'll show you what I mean. Let's go to the 30-minute. So this is what I was looking at for the downside S&P is I want to see, actually, let's go to this chart. Let's go to, because I want to see pre-market here. So what I'm looking at, and I didn't get it today, so I'm like, what I'm looking at is you can see there's some massive selling back here. When was this? This was December 20th. You had some massive selling, big sell off. Everybody's like, what is that? Well, there wasn't a whole lot of buying. Volume is low. So people are taking profits at this level. What is this? 475. I think that's the level. 475 people took profits. We got to 476. They took profits again. And then we couldn't get back there. So I call these gap fill reversals. Let's see if if we could see the gap. There should be a gap today. And a lot of you guys are probably familiar with that. Let me throw that gap on. Oh, I got the gaps on this one. Here we go. Right. So here's the gap for S&P, 470. What is this? 475.50. I don't even know if that's the real gap. I feel like it's higher. Either way, I want to see the S&P come back to 475. If it can't get above 475, I might short the S&P. We'll see. We'll see how that goes. I'm going to take some more comments and questions. Yeah, I'll do that. Let me give me a short little break. What is it? It's already been an hour. Let me take a little bathroom break. I drink a lot of water, try to stay hydrated. We'll come back. We'll do some technicals if you want, and then we'll be done with that. Give me a second. All right. So what'd you say? I think BTC is going down, possibly. Can you see what is that? Gold USD. Okay, gold USD. You want to see gold USD, and also Tigger Media, the crew, Bukowski. What up, Bukowski? We'll see how this plays out. If you guys have any macro questions, I know it's been a while. But yeah, I think we just have a correction. We got to see what the Fed minutes have to say. Let's go to that gold USD. Where's the currency at? Gold. Do I have gold USD up here? All right. Thanks for the ticker though. X. What is this? XUA? XAU USD. Okay. Oh, you're just looking at straight gold though, right? I guess this is four. It's probably a 4X person. Spot gold. Let's take a look back really quick. What is spot gold looking like? It looks super bullish. Um, the only problem with spot gold, let's see, does it go back? This looks bullish, but that's like 100-year chart, right? The issue I have with gold is it's really barely above where it was in 1980s. Okay, it's still where it was in 2011, 2010. It keeps getting sold off here. It's a $10 trillion asset. Does it go higher? Maybe a little bit, but it doesn't do what it used to do because there's a new monetary asset that's Bitcoin and tech stocks. When the Fed prints, when they cut rates, tech goes higher. Mega cap, Apple, Amazon, Google, Facebook, Tesla, Nvidia, AMD. Um, you know, tech outperforms. There's a reason why Warren Buffett doesn't own gold. So on a macro scale, I don't like gold as an investment. Maybe some hard gold, but it just doesn't perform the way people want it to. Now, if you're looking really short term, that's a little different. If you're looking short term, the question here is for gold is when does the Fed become, start to ease? So maybe you want to go to the 4-hour chart. The Fed minutes probably move gold tomorrow. You got to watch the Fed minutes or understand them. So obviously there's a lot of selling pressure here at 2089 for gold. Um, if FOMC comes out pretty dovish, I don't know. I think gold is stuck. I think it's going to be stuck because I expect growth to slow down, and that pushes the dollar higher, and that means gold is going to also gold is kind of moving with the S&P, right? Unless you're just day trading it, it's moving with the S&P. So you just want to look at those, maybe look at these levels in context to the ISM tomorrow that comes out early morning. And if the ISM comes out weaker, expect gold to actually fall. That's what I think happens. Yeah, but for the most part, yeah, spot gold. I mean, you got resistance here, you got resistance here, you got some support down here. But I don't know what are you trying to invest in gold? Are you trading it? Yeah, it's been a while. What up? Your alt D? I can't, first of all, I don't tell anybody what they should do, just give you insight. Do I think BTC is going down? I'll say this. If Bitcoin keeps going up faster, it's probably going to sell off when the ETF comes out. That's my view. If it consolidates, probably goes up. It's just there's a lot of inflows coming in to BTC, and I think BlackRock's already been buying little by little, the way MicroStrategy did back in the past. So I'm not sure. I'm not sure. We'll see how it plays out. But I'm gonna sell my alt. Is that altcoins? Are you saying altcoins? I'm very bullish on Chainlink. I think Chainlink goes much higher. It can go higher without the crypto narrative, or Bitcoin. If everything materializes, why is Chainlink so special? Because Chainlink has the only technology to actually start the new financial crisis. You guys heard about the Great Reset. The Great Reset is the whole entire financial system moves on the blockchain. That is the Great Reset. And if you think I'm joking, go read the white paper for Swift. Go read the white paper from the World Economic Forum. They're all moving to blockchain technology, and they need a connector that is Chainlink. That's why I'm so bullish on Chainlink. Just wanted to throw that in there. Not XRP because it doesn't do that. Are we looking for shorts or longs? I mean, you can ask the questions. You can ask your questions. When does ETF come out? Nobody knows. I think the deadline for the ETF is January 10th. So what is this, next Wednesday? I think that's the next Wednesday is the ETF, the deadline. It's coming soon. But you never know with Bitcoin. Short term, it's impossible. It's impossible to know short term. If you were very bullish on Bitcoin, you should have been in a long time ago. If not, you wait for a very vicious pullback, a nice 20% pullback in Bitcoin, and it's going much higher after that. Bukowski, is there any danger when DGI and GDP diverges? Just look at any chart. Johnny Schroeder shared today. Johnny, is that the guy on TikTok? Johnny? Here's a problem with GDI, and I brought this up in the past. Let's see if I got the chart. GDI is a pretty good indicator of a slowdown, but see if I have that chart. Or maybe it was on my Twitter. Basically, yeah, GDI is falling versus GDP, but the real issue with the data right now is that we're using old legacy systems. This is not 2000. This is not 1999. I mean, 2008. The economy the gig economy is much bigger than people think. Okay. And again, I got to watch what I say about this, but a lot of people are being paid under the table. So baby boomers own 60 something trillion dollars of wealth. They don't need to work. They're getting fixed income, record high dividend income, record high fixed income. They're spending it on services. The gig economy, Uber, Lyft, DoorDash. Look at DoorDash valuation. I can't say the real thing. $18 billion valuation. There's a lot more jobs too. The creator economy, right? YouTube. What is it? A lot of not software, but marketing. A lot of marketing stuff. So those numbers aren't going to be in the GDI. So I think those numbers are false. I don't think they track the real economy. That's why I don't think we're headed for some, you know, we're headed for a slowdown. We're in a slowdown, right? The forward-looking data shows us that, but nothing too bad, nothing too serious. Nothing the Fed can't cut rates in reverse. Because as soon as the Fed cuts rates at all, economic activity goes up. It goes up, and they could use the balance sheet plus election cycle. Guess what? If economy slows, you really think the White House isn't going to pass some bill? They're going to do it. I do have a concern regarding derivatives on large bank balance sheets. For example, JP Morgan has 49 trillion in derivatives on their bank balance sheet, but 3 trillion in total assets. If these go south, well, I'll tell you this, the Fed will never let that happen. The Fed will never let that happen. That's why they opened up the bank term funding program, Brian. And what that does is they mark to market what the highest value was before. Now, that's a simple way of saying it, but basically, any derivatives, which are also treasuries, any of that derivative stuff, they're not going to price what the real price is today. If it's lower, they're going to look at what it was at its highest peak, especially when it comes to US Treasuries. So also derivatives are going to be inflated. The derivatives market, by the way, is like $4 quadrillion. That's a derivative, right? Listen, the derivative market is a function of the S&P 500 and treasuries and all assets. The Fed will never, they will increase the Fed balance sheet. They will never let that fall because that is a financial crisis. So there has to be some type of surprise. We're not going to get a surprise because the Fed's tools are much better than they were. They have technologies now. They're using AI that can foresee what's going to happen into the future. This might not be the case in 2030, but for now, the Fed has their hand on things, and they'll just create another program if there's some type of issues. So I wouldn't worry about that. Me personally, a lot of it is fear porn. Why is tech dumping? It's overval. It's overpositioned. We went through this earlier. If you're just jumping on, tech is dumping because let's go to tech. Tech is dumping because investors are overpositioned. There's bearish divergence on the S&P, and here's the Qs. Yeah, Qs are dumping hard. I think the Qs might come back down to 390. They could come back pretty far. But yeah, over positioning. We just talked about this earlier. You probably missed the stream. Obviously, you probably just jumped on. But to answer your question, it's all about positioning. Okay. Active fund managers are fully invested. Now, you can sell. Peak bullishness. We already hit peak bullish sentiment. And now the call to put ratio has flipped. So expect a correction. Expect a correction. Watch the dollar. The dollar is going to give you that signal. It's going to make it a lot more clear. And I would never mess with no Chinese stocks, not in this day. Let's see what else we have. What exchange do you use to trade in the US? What exchange? Hold on. Who it is? 1 hour chart. What do you think about gold on a 1 hour chart? Let's see. Gold on a 1 hour chart. Um, I mean, I really doubt gold can get above this level because growth is kind of weak, and that just means yields go higher. I mean, lower. So 1 hour chart for gold. I'm not a Forex trader, by the way, so I'm not your expert here. But gold likely makes its way down here until the Fed pivot really, or until the Fed cuts really come into play. If the Fed starts signaling they're going to cut sooner than expected, gold will go higher because the baby boomers hold gold. They don't mess with crypto like that. They don't mess with crypto like that. So there's all different participants. There's a lot of different participants, and gold will not outperform Bitcoin as a store of value. But because baby boomers and because the Forex market is the biggest, trading market, gold will go higher to some degree because the Fed is going to debase the currency, right? They're going to debase. That's how the market works. That's how the economy works. They debase the currency. That's how the financial, that's how the banking system works. So they debase the currency. Gold's going to go higher. It just won't go higher than Bitcoin. So resistance is up here. I really doubt we get above that. Now, if it were me trading gold, I would try to get short off of probably this, what is this, 2100? I'll probably get short off 2100 unless growth is, let's see, unless growth is I don't know, to be honest with you. I really don't know, because we need to see what the Fed minutes say tomorrow when it comes to macro. I'm not sure, but it looks like it's more likely to come back down to 229 or down here to 19. That's my guess. Again, I'm not a gold expert. I mostly look at stocks and crypto. But that's what I would say. I don't know. I don't know. I think if that gold goes down because the dollar should go higher tomorrow. I think the dollar goes up. That's just my call right now. Don't bet on it. Just keep that in mind. I think the dollar goes higher because people are selling their stocks, they're collecting profit, they're tax loss harvesting, and well, I don't know if it's harvesting, but they're selling for taxes, and growth should be weaker because today we got that signal that growth should be weaker. Which direction do you think non-farm payrolls will take for will take for gold? I think non-farm. That's a good question. I think non-farm payrolls continue to slide, especially because seasonal hiring is over. So If growth slows, rates, here's where the dollar changed, rates go lower or stay where they're at because they've already fell, pretty fast. So if non-farm payrolls come out weak, I think they take rates lower. But the dollar no longer moves with rates. These are what I mean by rates. Rates come down, but I think the dollar actually goes up and starts turning into a safe haven, right? And the geopolitical risk. Geopolitical risk is huge because the euro dollar market is bigger than the US market. And think about the US. We're pretty good. If you're in another country and there's some type of geopolitical unrest, right? War, you don't want that country's currency. They're going to print the you know what out of their currency to promote war. The dollar goes higher. So any type of war, dollar goes up. That's why Russia, Ukraine, dollar exploded. I don't think the war gets that bad, but I think the dollar goes up for a while before it rolls over. Maybe it gets stuck here. Who knows? But yeah, non-farm payrolls coming out weak, dollar goes higher, which is different than it's been in the last. Yeah, that's different than it's been. Things are switching. The market is switching up here. That's why we got to keep track of this. Things are switching up. Who is that? DLC. What exchange do you use to trade in the US? What exchange do I use? Uh, the New York Stock Exchange. I mean, I don't really use it. I just use Robinhood right now. I'm not doing no day trading. I'm just swing trading, but I use Robinhood. Just it's not really an exchange. We have brokers. Tesla posted record sales. Yeah, Tesla blew it out the water, but it's just not enough. It's just not enough. The market's rolling over also. So I think there's going to be a really good dip buy for Tesla coming in soon. Um, Maybe after earnings, who knows? I say this: if Tesla, okay, and this is not financial advice, if Tesla sells off going into earnings, I might buy a couple contracts, like 3 to 6 months out. If that also aligns with the market, selling off pretty sharply, I might front run that and put my stop somewhere, right? So what am I looking at? I'm looking at this reverse head and shoulders right now on Tesla. If it plays out this way, it might break and it's going to pull back sharply, could come down to 212. I don't know if it comes down that far. 228, 230, more likely 230, and it depends how fast it comes. So I don't have a direct target. I'm looking at the macro. I'm looking where the dollar's at, where rates are, and putting that all together and saying, this is a good price. Also, I want to see that RSI really really go to the downside. I want to see it really oversold before I take that position. But right now, it's just not a good risk reward to be getting long Tesla, in my view, for a swing trade. Maybe a day trade. Tesla's wild. Everybody's, day trades Tesla. Why is tech dumping? Is that the same question? We answered that, Mosine. I don't know if you heard me. Redfin Z, I'm eyeing them up. Z, I haven't, you know what? I haven't looked at Zillow for a long time. Zillow, Open Door. These should start to perform going forward because rates are headed lower. Rates are headed lower. Let's take that off. Rates are headed lower. Anything that was interest rate sensitive will start to rebound as long as growth concerns don't fall below expectations. What else we got here? Fidelity is awesome with the fill, but Robinhood has the best options. Yeah. Robinhood might have the best options. I know Webull has really good charts. Robinhood needs to increase. Robinhood's getting better. They have a nice options chain where you can look into the future. It's getting better. You're doing your research. Okay, heck yeah, nice. Appreciate the love. Big man's coming. Thank you. DXY goes higher. Yeah, I think DXY does go higher. How do you see SPY? Um, you're probably just jumping in. I think SPY. I think we're looking at a correction. Look, I'm going to end with this. Okay, I'm pretty much done here. We went through everything. Unless you guys have more questions, I'm going to finish off with again why we have this correction. You can buy crypto in Robinhood. Yeah, you can. Yeah, you can buy crypto in Robinhood. Sometimes I switch it between Robinhood and Coinbase. You can send it through the blockchain, actually, back and forth. It's pretty cool. Small transaction fee if you go through Solana. Solana is really quick too. If you do USD, that's a whole nother conversation. But yeah, you can do that. So here's what I got: S&P, right? Me come out a little bit further. So S&P hit all-time highs. Pretty much. I mean, we're at all-time highs, right? There's a massive, massive, selling order right here. I don't want to call it a selling order, but there's a massive resistance here. I mean, this was here for a while, right? 1, 2, 3, 4, 5, 6 days. So this is pretty much where we came to for the S&P. Pretty much all-time highs. Call it all-time highs if you want. If you don't, fine. Pretty much. Okay. We got rejected pretty hard. Bearish divergence on a technical basis. The most buying pressure was back here, December 14th. We kept climbing with no volume. We got rejected early. We retraced back up, got rejected again, and we're gapping down. We didn't fill the gap and get rejected, but we're gapping down. I think we're headed for the 200 moving average on the daily, which was also previous support, right? Or consolidation, and also the previous high back in the summer. So I think we're coming down to some degree. Like I have a higher percentage a higher probability we come to like 460. Okay. At the lowest, at the lowest, we could retrace back down here where this little consolidation was, because there's another I know it's hard to see on TikTok, but there's another support zone. Let me take these gaps off. It's kind of getting in the way. There's another support zone down here, which is about 450 or 4,500 on SPX. So somewhere between 460 and 450 or 453, right? I think we're coming back down to there. Um, you know, position wise, if you look at the data for positioning, fund managers are fully invested, so there's no more buying pressure. They're fully invested, or they're headed for fully invested. About 100% asset managers. Sentiment, bullish sentiment peak. Now we're getting a little bit of bearish sentiment here because geopolitics. Really, the market just ran up too much, right? It's over. So people are taking profits up here. Also, GDP is slowing, so there's always that fear of things fall too quick. You have that also. We need to see what the Fed has to say. Inflation is done. That's the good catalyst. If inflation really falls, like if we get the inflation report, when's our next inflation report? I think it's in a couple weeks. If that comes out significantly good, I think the market just rips right back up, because that's going to tell us that the Fed, if it drops below expectations, that tells us that the Fed is now going to be more confident to cut rates before growth slows, because they're like, oh, we don't need to let growth fall, because the whole reason to cut rates, the whole reason to raise rates was because of inflation. So they can reverse on that and say, um, we don't need to cut rate. We don't need the whole thing is like, a lot of people think you need a recession for inflation to come down. That has not been the case. That has not been the case. So now you can cut rates just because inflation, not because recession. You can cut it in a that's a bull case, right? So we'll see what inflation looks like. I think it's going to be good because oil is dropping, commodities are still low, the consumer is slowing, Christmas is over, so we're going to get this pullback. I just don't know how far it goes. So that's what I see for SPY. You have some support here, but I don't know if it holds. Also, another key factor: global liquidity actually slowed significantly. This has been helping the market a lot. So reverse repo, all that money coming into the reverse repo, it went right back into the reverse repo. This is an inverted chart. I know I'm talking quick here, but reverse repo liquidity fell. So Fed liquidity fell also, right? This is shadow liquidity. Well, it came back into the Fed for some reason. Somebody knows something. So I think there's a deleveraging happening from the market in general, whether it's equities, whether it's bonds. You also see a slowdown in the bond market. Okay, oops. Let's go to the bond market. You also see a slowdown in the bond market, and this is gapping down pretty quickly. So maybe we fill a gap. Where's the gap at? We might fill the gap here at 97. Maybe we go even further to 94. But this won't last. In my view, there's a lot of margin and leverage waiting to come back into the market. This will not last. Why? Because bonds will bid up as growth slows. So this is a really good setup for a correction and a good buying opportunity, I think. And it depends who you are, where you're at, your risk tolerance. Are you a trader? Are you a position trader? Are you a swing trader? It really depends who you are. This is not an advocation for anything. This is just me saying there's a lot of fund managers, a lot of hedge funds, a lot of momentum indicators. I mean, momentum funds that are going to look to get long S&P. And if they can't, they might just chase Bitcoin higher to catch up, right? To catch up. So yeah, I think we get a correction here. Watch bonds, watch the S&P. Most important thing, as usual, watch the dollar. When the dollar finally peaks out, that'll be the time, whether it's here or here, that'll signal first that the S&P will be bouncing. I just don't know where it's at. Okay, there's a lot of info out there. So it's not just where is it? I don't know. I don't know. There's spots. There's areas. There's areas, but we don't know. We need to see what the Fed says. I think the Fed minutes are going to be key tomorrow. So look at Fed minutes tomorrow. Would you say thoughts on CVS going higher? Well, the market's falling. I wouldn't be so bullish on the market right now. Okay, just so you know, I wouldn't be so bullish on the market. CVS is going higher, it's breaking out. I don't know, maybe they had earnings, but I don't think it holds. You want the if you're going to increase your chances, you want the overall market to hit a bottom. Okay? So even if CVS is going up, this move will not last because there's just not enough ETF flows to support. CVS is inside of an ETF. So if those ETFs are falling, you're fighting the trend. You don't want to fight the trend. You want to wait for those ETFs to bottom, which are S&P for CVS. I'm pretty sure it's in the S&P. So once the S&P bottoms out, then CVS might come back down or maybe it goes higher. But right now, it just tells you there's momentum. Had a good earnings report, great. But you want the S&P to also go up. You want the dollar to fall if you want that to stick. If you're day trading, it doesn't matter because you're just in and out, right? If you're day trading, it doesn't matter. You're in and out. But if you're position trading or swing trading, you need to wait for the overall market to turn back up. You need to wait for the macro forces, the dollar, to really start to fall or to peak out. And you want to see positioning switch bullish again. And positioning is doing the reverse. So wait for this bearish divergence to pull out or to play out in the S&P. Okay. Buying pressure is falling and it might come all the way back down. Who knows? And then we'll see where it gets on that support. So that's all I got for you guys today. I'll answer a couple more questions that I'm out if I can answer them. If not, then because I can't be on here forever. Some people just keep jumping in. Let's see. Peloton looks scary. Yeah. If anything, hey, maybe some puts. Maybe look for some puts. I'm not saying to do that, but right now, puts on the short side, coin tank today. Yeah, look for some puts maybe on something weak. Um, I don't know who's weak. Who's weak? I don't really know who's weak. Let's go through tech real quick. I didn't do this, so I usually do this. Let's go through big tech. Oh my gosh, Apple got crushed. Okay, but also don't chase this lower. You want to see a rip back, or we call this a retracement back into previous resistance before the puts. Do not chase puts lower. Like Apple's already back down, so Apple might just consolidate here. I wouldn't chase that. Amazon, nope. Google, nope. Meta, nope. Those all look good. Netflix, nope. Nvidia, nope. Tesla down. There's probably a rotation happening. AMD's been up a lot. We'll see what happens tomorrow. Let's see. I'm trying to see if there's anything that looks good for a short. Oracle, Shopify, Zoom. There's probably a lot more stocks. I'm not going to go into everything that looks like a short. Look at this. This might be a good short, but they don't have good options. Teladoc. See how that capitulation right there? It's capitulating against that downtrend. It might roll over under 21. Yeah, they're not profitable yet. Square. I bet Robinhood got merked. SoFi. Yeah, Robinhood's coming down. Robinhood went up a lot. So Robinhood probably falls a little bit as a consumer slows. PayPal, not bad. That trend might break in PayPal. There's probably better shorts out there. I don't know. I would just stick with S&P and the Qs. But more than anything, Palantir is looking good. That would be good for a long though, to hold. The leader in AI. MicroStrategy. Oh, that looks good. See, this you want to see something like this if you want to get short. You want to see something where this is bearish divergence. Price is climbing, but the buying pressure is actually falling. So this is a setup to reverse. If Bitcoin drops, MicroStrategy is getting crushed. That tells you the sellers are in control, right? Not yet, but pretty much it looks like it's going to roll over. This has two drivers. The I don't know if it's in the S&P or the Qs, but the overall market plus Bitcoin. So if Bitcoin retraces, this goes lower and it's still pretty high. So this might break down. You could see MicroStrategy break down. It's just not a good stock to really short because it's so expensive. It is so expensive, but you want to see something with a very high capitulation or this big upside move because that tells you that there's a lot more strength coming down, and you have bearish divergence. So that might be a good setup. Maybe back to like 600. Who knows? Uh, Coin. Did coin get smashed? Coin's coming down. Airbnb, CRISPR. This one's going to be interesting in the future after passing the FDA approval for CRISPR gene editing. I wouldn't look to short it now. Could go short, but yeah, no, just keep it simple. Maybe IWM because IWM's been up a lot. Maybe this comes back down to the 200 moving average, right? Maybe it fills this gap. This looks pretty good. There's a gap here down for IWM at 193. So that could probably fill the gap over the next couple of days. And it looked like it actually had a gap fill reversal. Yeah, let's see. Did it have a gap fill reversal here? Yep. So this would have been nice today because it gapped down and then it filled the gap. Here's that white line's a gap. It filled the gap. It could not get above the gap or pre-market highs. So if you were to get short, your stop is above the pre-market highs, 202. So it filled the gap, got reversed, got rejected. Let me throw VWAP on. Got rejected, falls under VWAP. Now it's below pre-market highs or pre-market lows. So this would have been a nice play, but you're looking for something like this where it gaps down, it retraces, fills the gap, and then reverses back down. Other than that, I mean, it is what it is. Got to do your own due diligence. Depending on the state you live in, you can buy, sell certain cryptos on Robinhood. Oh, okay. I didn't know it was state by state. Had no clue. Had no clue. I thought it was just federal. I mean, nationwide. I didn't know that. Huh. GME looks like a nice short. I'm going above time here, but there's a lot of stuff I didn't cover. Oh man, GME is getting smashed. Yeah, there's a lot of. I haven't really looked at shorts. Maybe I'll look at them later today and then come back tomorrow and be like, oh, here's a good short. But to keep it simple, here's the thing. A lot of these shorts, people are going to do those zero dated options. You're going to get burned if you don't know what you're doing. And the option chain sucks. They're going to be too expensive. The S&P has the most liquidity or the Qs. Those are going to be the easiest things to really short. See how it gapped down? It didn't fill the gap, but it came back into previous. It gapped down, came back into the previous support, turned it into resistance and reversed. That's a nice play right there. That's a nice play right there. Right? Support, rejection, gets under VWAP, goes lower. So, but that's already too late. That's too late now. A lot of people got faked out here too. So draw your levels. I'm not really doing day trading content anyways, but what app are you using to view the macros? I'm just using Trading View. This is just Trading View. This is all Trading View. I just have my Trading View set up a certain way. But yeah, this is just Trading View. Nothing special. Nothing too special. Yeah, watch how the dollar reacts tomorrow in that meeting. I think I'm more interested in catch. I'll tell you what I'm doing though. I'm more interested in catching something long. I really want to see Tesla come down because my style is a lot different. But I want to see Tesla. I mean, when it consolidates for this long and it breaks out, it's going to be nasty, especially because it's swallowing the whole EV market. As much as the FUD, you see it swallowing the EV market. It's breaking out of this long trend. Could come back down here. Who knows? But I'm looking for that play. Now we know production's good. We know deliveries are good. So the fact that price is falling when the fundamentals are improving, the fundamentals for Tesla are improving, especially with the rates coming down. So possibly this gap fill at 239, 240. If not, maybe we come all the way down, depending on how bad the S&P sells off, maybe all the way back down to 223. That would suck if you're in it. But that's what I'm looking at because I think this will be the nastiest breakout, just like it happened earlier in the year, the summer rally. This thing went up 100% into earnings. So that's my view. I'm running out of breath now. So yeah, it's Trading View. I'm just looking at Trading View. All right. Well, hey, lift weights, eat healthy, eat clean, learn something new, teach somebody something that you learned. Stay blessed. I'll catch you guys next time. Thank you for your time. Thank you, Kiki.